Good morning, traders, and welcome to BCI's morning market analysis. Markets are kicking off today with plenty of focus on the US dollar, commodities, and central bank dynamics. Let's break it all down. First up, let's have a look at the DXY. The dollar is trading below the 98 mark after giving back earlier gains, extending a 3-day losing streak. Traders are increasingly pricing in a September Fed rate cut, with futures markets showing nearly a 90% possibility of a 25 basis point move. This dovish shift comes against the backdrop of President Trump's attempt to remove Fed Governor Lisa Cook, move that's raising fresh questions about central bank independence. Technically, the dollar index remains inside a descending channel, holding below its 9-day moving average, around 98.23. Momentum signals lean bearish, with the RSI sitting under 50 but not yet oversold, leaving room for some further downside. Key support sits at 97.68 and 97.11, while the first layer of resistance is just above 98.23. Next up, let's have a look at WTI, which is holding around $64 per barrel after falling back on Thursday. US crude inventories dropped more than expected, but the market is weighing that against seasonal weakness in demand as summer driving season winds down. India's energy imports are also in focus as tariff tension builds with Washington, though analysts expect Indian refiners to keep buying Russian crude. From a charts perspective, oil is consolidating in a $60-$65 range, with repeated support at $61.45 and the psychological level of $60 forming a short-term floor. Resistance remains unbroken at $65 and 65.76. For now, geopolitics and US demand trends are setting the tone for crude oil. Next up, let's have a look at gold, which climbed above $3,400 an ounce, marking a 5-week high. A softer dollar and ongoing safe haven flows are driving the bid. Markets are increasingly convinced that the Fed will cut rates in September, while political uncertainty around central banks' leadership has added another layer of support for the metal. Technically, gold is trading comfortably above its 9-day moving average at near 33.62, with RSI pointing higher at 61. Immediate resistance sits at 34.16, followed by 34.39 and the all-time high of $3,500. Initial support comes in at 33.62 and 33.52. Lastly, let's have a look at the Australian dollar, which extended its gains trading around 65.25, supported by a softer US dollar and easing expectations for a further near-term rate cut by the RBA. Markets pricing now suggest only limited easing left in 2025, with September odds falling to 25%. Locally, business investment rose in the June quarter, led by strength in data centers and logistics. On the charts, the Australian dollar is holding just above its ascending trend line and trading north of its 100-day moving average at 64.75. Upside targets could include 65.68, which is the August high, and the psychological level of 66 cents, while near-term support sits around 65 cents and then 64.75. Well, all eyes turn to Friday's US PCE inflation data, which is the Fed's preferred gauge of inflation, which would also cement expectations for next month's meeting. Until then, markets are likely to remain sensitive to any political or central bank headlines. That's all from me today for this morning market analysis. I wish you all a productive trading day. As always, manage your risk and happy trading.